All right, let's talk about the crypto crash. Specifically, we're going to break down Robert Kiyosaki's take on why it happened and, more importantly, what he thinks you should do about it.
You know that gut-wrenching feeling of checking your portfolio and seeing it's been cut in half? Yeah, if you've been there, you are definitely not alone. It's brutal, and it makes you wonder, why on earth did this happen? Well, Robert Kiyosaki, the guy who wrote Rich Dad, Poor Dad, he offers a way to make sense of all this chaos. And he says, look, if you want to understand the market, you have to first understand the people who are in it.
So who's actually out there buying and selling? Kiyosaki argues that everybody, and I mean everybody, falls into one of three buckets. Nailing this down is pretty much the foundation for his entire worldview on this stuff.
He uses some really simple analogies to break this down. First, you've got the investor. Think of this person as someone buying a house to actually live in, for the long haul. Then there's the trader, who's more like a house flipper, just trying to make a quick buck. And finally, the speculator. Well, he says they're basically just gamblers at a casino, betting the price will go up.
And here is the absolute key to his whole argument. Kiyosaki believes the overwhelming majority of people in the crypto space are speculators. They're not in it for the long-term vision, they're not trading the charts, they're just hoping to strike it rich, fast.
Now, when you have a market that's packed with gamblers, what happens? The house wins. Kiyosaki estimates that a staggering 90% of these speculators, the biggest group in the market, end up losing their money.
So, because the market is dominated by these speculators who are driven by emotion instead of strategy, it creates this totally predictable, super volatile cycle. And it is an emotional roller coaster, right? It all kicks off with FOMO, the fear of missing out. Everyone sees prices going to the moon, so they pile in, usually buying at the absolute worst time, right at the peak. Then, the smart money, the early investors, start to sell. Bad news starts to trickle out, and that triggers the final stage, total panic selling, where all the speculators dump everything at a huge loss.
Kiyosaki argues that you have to be really skeptical of the news you hear during these crashes, things like regulatory threats or just bad press. He believes a lot of it is deliberately planted to create fear and shake out all those emotional speculators, basically tricking them into selling low.
But you gotta ask, why is the market so easily spooked in the first place? To really get to the bottom of that, and to understand the whole reason things like Bitcoin even exist, Kiyosaki says we need to take a little trip back in time.
Check this out. For a long time, the US dollar was actually backed by physical gold. But then, in 1971, that all changed. That link to gold was completely cut. And that single decision, he says, changed the rules of money forever and really set the stage for the world we live in now.
And just like that, the dollar became what we call fiat money. Since it's not tied to a real asset anymore, governments can print as much of it as they want. Kiyosaki has a much harsher name for it, though. He calls it fake money, or even joss paper. You know, the stuff you burn for ceremonies? Because the more they print, the less each one is worth.
Okay, so understanding that history is the key to the real investor's strategy. It's not about getting rich quick. It's actually about protecting your wealth from a currency that is designed to lose value over time.
So you've got this fundamental difference. Fiat money has an unlimited supply, which means it's pretty much guaranteed to lose value over the long run. But hard assets, things like gold, real estate, and yes, Bitcoin, have a finite, limited supply. That's why investors see them as a safe haven, a way to store their wealth away from the money printers.
And this idea completely flips the script on what a market crash even is. For an investor like Kiyosaki, a crash isn't a disaster. It's a sale. It's a Black Friday event. It's the best possible opportunity to buy valuable assets on the cheap from all the speculators who are freaking out and panic selling.
Their whole mindset can be summed up with this one phrase, which you probably also know by its crypto name, HODL, or hold on for dear life. It's incredibly simple. The loss you see on your screen, it's just a paper loss. It only becomes a real, permanent loss when you actually hit that sell button.
So all of this leaves us with one final and really important question to ask ourselves. Based on this framework, which player are you? Because when things inevitably get crazy again, your answer is going to determine whether you're driven by fear or by strategy.